Good evening. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this Thursday, the 18th. I keep thinking it's 31st today. I don't know why. It's the 18th of March, 2021 after 7 p.m. So it's a long day for me. Well, yesterday I spent a little time explaining here, but I did a lot in my research reports explaining a yin-yang impact. And that's where the U.S., we get a major report, comes out in the afternoon, you get press conferences, the FOMC meeting ends at 2:30 because of that time. Think of what time it is in Asia. Europe's already in the evening, 8:30, 9:30 at night, 6:30, depends where you're at in Europe. So you got your different time frames there. Most people are not in their offices. People trade it one way in Europe. In Asia, moves to Europe, they go, maybe not. You wake up in the morning, the U.S. is doing one thing, and as traders wake up gradually and they start thinking about it, the market starts changing its character. It's called the yin-yang impact, and you saw that today definitely at work in the markets. Nothing changed between the 2 days, yet the futures markets cratered today in stock indices after soaring yesterday. What didn't change are interest rates. 10-year notes went as high as 176 and a fraction today. That is powerful. Remember, I was telling you that we have a lot of money coming in from the Fed this month on the very short term. They're paying back like $1.9 trillion or $8 trillion to the Fed. Well, if you looked at 30-year money, it went negative today in the U.S. to negative 0.2 and a fraction percent. Whoa. Happened. That's not taking inflation into account. GameStop, you have momentum down. Now you've got lower highs and higher lows. You don't have a trend any longer. To reinstate the trend, you've got to get back over 231.47. That would do it. Then you'd have, again, higher lows, higher highs. But if this market wants to drift, it might be headed towards this 169.5, 170 level. In AMC, I'm going to repeat again, LA's opening, all these movie theaters, the market is looking over the horizon. Any revenue is better than no revenue. Do you disagree with me? And I know I'm dying to go to a movie theater again. I've had my COVID shots. I don't want to sit necessarily next to everybody, but they'll have it in a way where it's clean and so on. But you like the big screen, so you're still seeing the bid come in there. It makes sense. When we look at PAVE, you can see that this market's now starting to stall out. This is the first sign of a stall. Interest rate fever might be taking over the market, getting fearful. How are we going to pass any money for that if these rates are going higher on us? You have a pattern now of a higher high. We do have, I can argue through this that you have higher lows, higher highs with today, and I should remove those arrows. It's hard because you had an outside day up and then you took out that low. Now what did we do today? We took out the low of 24.91, 24.94, and with today's high you took that out. You ended the bearishness, if you will, or of when you took that out down here, you killed that bearishness. Now if the market falls, well, something else is going on, but you killed that outside day down play that I so often see, which often says prices are going back to 23.81. Doesn't mean it can't happen, but that part of the play did not occur. When I look at the moving averages, well, the market still has a goal of the 18. When I take a look at the slow stochastics, they are embedded. So until they lose that, these pullbacks in the market, I think, are being bought by the pros. If the red line closes underneath 79, I think they're out of it. I think the traders, as momentum trade, would back away from the market. THCX, be careful here. You could, with any move now under 2060, break the pattern of actually what you had here was higher highs and the potential now for a lower and low. I'm tired today, I can see this. In the SMH, you still have higher highs, higher lows. Now you're neutral, you're back under the 18-day average. But the big fight is right here. All the market did is, on this reversal with the trend up and the bias down, get back over here. It then turned the bias up, and now it's churning the traders right there. Not convinced it's going anywhere yet, and yet I keep reading. Everything I read about are these fabulous shortages in semiconductors. Got to be both pricing power there and opportunity. In XLI, you've got higher lows, higher highs, embedded reading. You keep hitting the Bollinger Band, coming down, letting the pros buy it, and going back up until the pattern breaks. It ain't broken. And that'll tell me when the red line closes underneath 80 that it's broken. In the energy sector, you were down 8% or so today in crude oil prices. In one day, you almost lost a whopping 10% if you think about it. Wow. So the market decided that the inflation readings, high interest rates, and a strong dollar, not the best thing for crude prices. That's what I think the market decided to look at, and that's it. And you might say, what do I mean by higher interest rates? Well, one of our benchmarks is the 10-year. You realize it's been staying in over 1.7, and it reached up to a new high plateau today. I think it's the highest high in over a year of 1.76 intraday. So what I've been saying, that creeping, I've been saying it since December. You're going to get creeping rates. I said it out for Bloomberg on their TikTok, and I said it's going to last through the year. I don't think I'm wrong on that. In the NASDAQ, the market is stalling on any rally attempts, and suddenly the momentum is turning down. It's a whipsaw right here. It's got this swing line up, the trend is up. If the pros bought it, and they may well have today at 314.77, I think if it gets under 311.39, they will bail. I don't see a sell signal, but I think that that'd be too much pressure. As we take a look at the emerging markets, well, they tried to get up today to the best reading in a long time. The upper Bollinger Band, it's just elusive, 77.24, couldn't quite get there. Again, interest rates weigh on all this as the dollar's strong, but what this market is doing, in my opinion, is basing for a much bigger move. I consider this all right now a base to the upside. In the gold market, you are fighting for direction to get it going to the upside. Notice the battleground. How often do you hear me say here for you, the 18-day average is the line in the sand. It's from that number trends get decided. So you were down in a big downtrend, you've rallied back to it, and that's your battleground. Don't know which way it's going to go from there. GDX, the gold miners, I think that you're overbought enough where money's coming off the table. Let's assume I'm wrong. I'd look for pretty strong resistance at 34.54. You have an idea I'm right. If you take out Wednesday's low of 3,300, tells me that you're probably going back to the 18-day average to regroup. TLT, well, as much as I thought the pros were covering, it's still slipping away. There's nothing to stop this 20-year money. The Fed isn't going to be there to cap it. So it's where the market wants to push it and gets nervous about things happening. But as for the Fed, you don't have to believe the Fed. I do. And I think until they lie to me, why wouldn't I? They're not concerned about the long-term end of this market. And they're going to anchor the short-term end. The Fed happens to be getting help on the short-term end from the Treasury, which has been returning a lot of that COVID money that it had taken, up to the tune of, what, $1.8 billion or so, and that's pushing the 30-year note, where? You know where that instrument went? Negative today, 0.25 point. Yeah, negative without an interest rate factor. FXE, still in a bearish state right here. Now, Paris today is extending the COVID lock-in. I got to tell you that. Throughout the country it's being extended, but in Paris specifically, and the curfew has been extended. People will say, well, they changed their curfew. Yeah, they adjusted for savings time. They just moved when it kicks in at night, that's all. But it's still very much there, and in Paris they're closing down non-essential retail shops. I'm sure you can get a great deal, but where are you going to go in Paris? Paris is wonderful. It's one of my favorite cities. But I can imagine just being stuck in your hotel. What fun would that be? So there's not much to do there. And you can see, when I talk the pound, I'm still talking what the general thing is. We need to see more relief out of the COVID part of it. So I put it all together. I look at these markets and I go, okay, day two of a bit of craziness. I'm trying to get to that. Day two of a bit of craziness, and I write about all that for you. You know, I have a complete research. I write 2 reports a day. I record 4 of these videos a day typically. And then I do 2 videos for my subscribers, and then I run my brokerage business at the same time. So if you wonder why I get up 3, 4 in the morning and I'm still here at work till 8 at night, that answers the question. I have an understanding family, which is great, but I put out a lot of research. And am I versed on the market? I think I am. Can I talk the talk? I certainly can. But the proof is in it. Can you win or lose with the trade? Well, the only way you're going to find out is with the free subscription. The word is free for 2 weeks to what I offer. Not taking credit cards. You're not committing to anything. I'd like to show you my product. I'd like to show you the philosophy of what we do. Call my staff. Go to our website. They'll make it available. I won't be doing this for free for very long, so you can count on that. Our subscription base keeps growing thanks to you people. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow.